Welcome back, traders and investors. We have Sean Udall on the line. He is the tech stock strategist. Sean, how you doing today?
I'm good, man. How are you?
Good, good. So, you got your start after doubling your money on NVLS Systems back in the early 1990s. So, could you just describe that trade? Was this something you did with the stocks? Is it something you did with the options? How did you play it?
Well, now that's taken me back a long ways. Um, that was this good old common. And that's, I kind of cut my teeth in the early days, figuring out kind of what made stocks cheap and what made them attractive. And a lot of what I do now, actually, looking at kind of a renewed growth story where, some gets kind of, out of favor, but I still think they have a lot of growth. And in fact, I mean, it was almost the identical trade last year with Apple. Everybody got really negative on Apple. It got really beaten up. I actually thought growth would reaccelerate, and actually the revenue growth for Apple is probably set to accelerate even more. But yeah, that was just a good old fashioned looking for growth, where somebody had kind of given up on the name, and still a good company. And heck, I mean, the funny thing is I doubled my money on that years back. I don't even want to think about what would happen had I kept all those shares till today. That would have been just one crazy return. But yeah, that was pretty much all there was to that story.
Okay, let's talk about the Apple trade a little bit because now it obviously is split adjusted. It came down from over $100 and came way back down. I'll have to look at the corresponding levels here. I know it was like 385 before the split, but we came down. I mean, the stock was over $100, made an all-time high at 10072. Came back down under $60 at 55.01. Now, you could have gotten hurt, several times along the way down. But so when did you start playing it, and how did you play it?
Well, I mean, that was, you typically, at least I do, I try to scale in. There's no way you're going to absolutely perfectly time things. And, again, I both do short-term trading and kind of investing for the long term. So there were a lot of trades along the way, right? But the key is, I think around a little under 500, I started getting pretty interested. In fact, around 507, so this is all split adjusted, but these are the prices I remember, right? So around
Okay.
507, there was actually an unbelievable reversal. In fact, so funny story. So Tom DeMark came out, and DeMark had not been very good on Apple. In fact, he hasn't been very good on Apple probably for the last year.
Could you tell us,
But
for our listeners, who
go ahead.
Tom DeMark is? I mean, I'm familiar with him, but
Oh, I'm sorry about that.
no, that's
Yeah,
okay.
Tom DeMark basically invented sort of a technical analysis system. They basically sell it via Bloomberg. So, he was a guy probably very little known, I don't know, 20, 30 years ago. And he did a lot of technical work and kind of rose to prominence. He got a couple hedge fund guys to utilize his work way back when, and these are big name guys, right? These are like the Soroses of the world.
Mm-hmm.
And I'm not going to get into too much of the history, but basically he got well known enough to actually create a system, and then they sell it via Bloomberg, right? So long story short. So he has made a lot of pretty bad calls on Apple in the last year and a half, but he sort of spotted something very similar to what I spotted. So when Apple first went from all-time highs basically back down to the low 500, so this was the first big bounce. The stock effectively went from about 500 all the way back. I think it went from 500 to 585. So I caught most of the meat of that trade, and then let a lot of it go, because I was still sort of like, okay, Apple's okay here, but I don't really love it because this was months and months away from the catalyst that I was looking for. But then pretty much when right about 450, 465, and below, pretty much every 25 points below 450, I got much more aggressive on the name. They, by the way, did very, very similar trade to that in 2011, 2012 on Google. So it doesn't always work out that well. In fact, I try not to buy a ton of stocks that are stuck in a very persistent downtrend. but I will do that if I feel like the fundamentals are extraordinary. So it's like any rule, right? There are times where typically most people get hurt buying stocks in a stiff downtrend. But if you do a lot of fundamental work and you value the companies pretty well, you can actually do really well by buying stocks in a downtrend. The trick is not to be too early. But long story short, you typically have to be willing to buy 2 or 3 or 4 times on the way down because there's just no way to pick, the absolute low.
Are you doing this through stock, or are you doing through this via the options market?
I would say when I'm scaling into a position, most of the time that's an option position, most of the time that's a common stock position. I will kind of mix it up. In fact, the great example, great question on that with Apple was I basically built my common position, and then once Apple kind of got down to the low 400s, I pretty much switched. I said, okay, at this point, I'm not going to buy any more common because it was a very expensive stock to buy.
Yep.
And I'm just going to start buying, leaps. So at the time, I was buying anything from like 450 to 500 leaps. That probably had about 7 to 9 months to expiration. So once I basically got up to what I would kind of call, okay, I've got a full Apple position, I said, okay, any incremental money I'm going to put into this, I'm going to do that via the options market, just to kind of reduce my total dollar risk of the position.
And what? So you were buying the stock, and obviously you were scaling into it. Did you have a point where, because if you started buying at 450, Sean, and it came down under 400, and you're buying decent chunks of stock, did you have a point where you were just going to say, okay, hey, I'm wrong on this? Did it ever get to that point, or were you just so supremely confident in what you were doing that, you were going to ride this one to the
well,
Hamptons
in
or to the poorhouse?
retrospect, I'll just say, oh heck, I never knew that there's no way I was going to be wrong, and I was so supremely confident. But in reality, yeah, I did have a plan. That's a good question. I don't really think that way too often. I mean, because if you do a lot of people just don't do any fundamental work anymore. I mean, let's be honest.
Point.
I mean, a lot of people just look at charts, and they actually don't really know the underlying value and the underlying technology that they're buying, right? So, I mean, that doesn't happen to me. I mean, if I'm buying something, I know exactly what the company does. I know what drives it. I know what the fundamentals are. The one thing I had in my back pocket on Apple, which was extraordinary, was the fact that they were generating so much free cash flow, and they continued to. So even in the quarters where that other people were calling bad quarters, they were pumping out like, I think the worst quarter in that period where the stock went from all-time highs to basically multi-year lows, I want to say the worst quarter was like a $11 billion or a $10 billion or a $12.5 billion free cash flow quarter. So even in Apple's terrible quarters, again, I never thought they were that terrible, but the market did. And even in those times, and they were literally generating, cash, like the amount of cash in a quarter they were generating was a quarter of all the cash that Google had on their balance sheet. So that was the case. I really was never that worried about it. I didn't know how long it would take me to make money, which bothers me. So it was bothering me that the market was sort of ripping in my face. And for a few months, Apple was sitting there making, money. And all my other tech stocks that I did like were going up, 5, 10, 15, 20%. So that, to me, that's your greatest risk, is if you really do know the story, you know the fundamentals, and you got a good catalyst behind you, you have a lot of opportunity costs. Other names can go up 10 or 15 or even 100% while you're flat. But there is a point, and the point at which, to answer your direct question, if the fundamental situation at Apple would have changed. So let's say that probably my critical point was the iPhone 5S. Now, I believed it was going to be good. I didn't believe innovation at Apple was dead. I thought everybody had kind of gone crazy, in fact, with that notion. But if the iPhone 5 had been poor and had been the 5S had been poor and been a disappointment, I probably would have had to start selling the position. So there was a point where I was like, okay, this is it. The fundamentals do have to start improving and things have to kick up, or I'm going to have to start changing my mind a little bit.
Okay, and so that's revisionist history. So let's talk about Apple now. I mean, are you still, you made some coin. I mean, have you booked your profits? Are you still holding on for all-time highs here? I mean, last quarter was incredible. They had, they beat the street. They increased the buyback. They raised the dividend. I mean, everything that you're
Yeah,
supposed to do. I mean, it's going to be hard for them to increase the buyback more and increase the dividend again. So are you still holding on? I know you had leaps there. Are you still holding on, or still got part of that position in your hip pocket, or are you flat?
yeah. No, I have most of it. I mean, you always want to be selling on the way up, right? So I've probably in total, so from a year ago or so, I've probably unloaded a quarter of my position. Maybe a little. Now the leaps that I made just absolutely scored on last year. Those were gone because those were actually January 2014 leaps. And I had a old Icon came into the mix last
Yeah, I
year,
was
old
going to ask you
Carl
about
Icon,
that. Yep.
and the stock had a huge spike, actually well before the end of the year. So I got out of my leaps at really good time with quite a bit of time to expiration left. But as far as the common position, and I actually reloaded on. In fact, our last call, I sort of described to you that I felt a lot of the story was still pretty good. So the stock has gone up a fair amount, but it's still very, very cheap. I still think that the next 3 to 4 quarters are set up to be even better from a cash flow generation. I mean, here's the thing: they're not even selling large screen iPhones yet. So now the stock has priced some of that in. Some of the good news is priced in. But for people, if people ever want to check on my service, I mean, I write about this stuff all the time. I have a new long-term price target on Apple. It's basically between 135 and 150. So it kind of depends how long you want to go out. But in the intermediate term, I think the stock can trade between 120 and 130 pretty easily. Longer term, which I'm going to say is a year, 18 months out, I think the stock can trade between 140 and 150. And and even at those levels, I mean, you're still talking about a stock that's going to trade at a discount to the S&P 500. So, let's just think about that thought for a sec. You have arguably the premier company in the world. It's debatable, is it number one or two or five, but you have one of the premier companies in the world that's trading at a discount to the S&P 500. So, like you want to talk about fundamental sell criteria blended with technicals. When the technicals, in my view, on like weekly and monthly charts, get very, very overextended. And you combine that with, let's just say when they're trading at or above, so equal to or above, when they really should trade at a premium to the S&P 500. So if they start trading at a premium to the S&P 500, that's where I'll be selling more.
Okay.
Absolutely.
And I can verify that, Sean, because I was talking with Brianna, and she, mentioned, bringing you back on the show, and in the back of my mind, a little light bulb said, yeah, that guy was really bullish some of the tech stocks and bullish Apple. So, wanted to get you back on again and
No, absolutely.
get your take on the market. We really appreciate you taking your time out, and we'll be in touch and certainly have you on again.
Hey, thanks for having me on. I appreciate it. Have a great day, you guys.
Okay, thanks, Sean Udall.